Apple shares driving the Nasdaq 100 to record highs. The question is, can Apple keep leading the way? Welcome to Trading Nation. I'm Eric Chemi, joined by Gina Sanchez with Chantico Global and Erin Gibbs at S&P Global. Gina, let me start with you. What do you think here about this run with Apple and the Nasdaq 100?
So a lot of this has been a catch-up. Apple has been really undervalued for most of 2016. Apple has had high dividends, it has had good growth, and it has also had a great buyback program that has been buoying stocks. Now, the problem going forward is that now that the move is done, now that you've gone from $10 times to 15 times earnings, where do you go from here? You really have to continue to see growth in Apple revenue. And the problem is they haven't really unveiled anything, really beyond new iPhones. And so the thing that we're looking for is a continued show of innovation, and we don't see that yet. So we don't think it's certainly overvalued. I mean, it's maybe a little overbought, but it's certainly not overvalued where it is. But we need to see reason to get excited for the next leg of growth.
Erin, when you look at the weight of Apple in the Nasdaq 100, is there any point in having one versus the other? Like, should someone just say, I'm just going to have Apple because the index is almost kind of the same thing, or vice versa?
So Apple is about 12% of the Nasdaq 100. So think of it as for every 1% move in Apple, you're going to see 1/10 of that in the Nasdaq 100. So there's still another 90% of weight of companies in the Nasdaq 100. And you get companies like Google, Microsoft. So I definitely see value in that diversification versus Apple that is really so tied to what it's doing with its iPhone sales. Of course, expectations are very high or are starting to get higher for the iPhone 8, but that's not until September. You might want to look at what other companies are doing up until then.
Gina, what do you think? Would you rather be long Apple or long the index overall?
Well, it's interesting because the index is being driven by Apple, but also by Google. And Google, part of its play is hitched on sort of this concept of net neutrality. And I do think that we do need to hear from the FCC as to what they're going to say about that. Google, Amazon, Netflix, those are all affected by that. So I actually am not sure that Apple probably isn't the safer bet to weather the storm. They're still going to continue their buybacks. They still have 1.8% dividend, and they have shown pricing power. So even though there's no new innovative product that's on their product line, you could still kind of continue to weather the volatility, whereas I do think we have to figure a few things out from the policy spectrum that could make things either very good or very challenging for the rest of the Qs.
And Erin, finally, just real quick, when I look at that overall index and you talked about the other companies that you get, it almost reminds me of a cable bundle. Right? There's 100 channels, there's 300 channels, but maybe you really only want 5 or 10. Should they just have a NASDAQ 10 and you just get Apple and Google and Facebook and Microsoft and just forget the other stuff that nobody else wants?
No, that's what your portfolio manager's for. That's my job.
That's for the high fee guys, right?
Yes.
Well, thank you, Erin, Gina. My thanks to both of you for joining us here on Trading Nation. I'm Eric Chemi. We'll catch you next time.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.